Hello, today we are going to discuss workers' compensation insurance. It is an insurance policy purchased on an estimated payroll. So you estimate the payroll for your employees for the entire year, and you purchase your policy at the beginning of the year. It is coverage for people who are injured working on the job. The rate will vary just as your car insurance rate will vary based on the dangers of the job. You will have a higher rate if you are working or if you have employees working in underwater welding than you would have for employees working in a teaching classroom. The rate varies based on the dangers of the job, and it is for people who are injured on the job. So to start this off, we will take $450,000 times 0.5% times 0.005, slide that decimal 2 places to the left, $2,250. Okay, we need to purchase workers' compensation insurance for the entire year based on this amount of money, based on our estimated payroll for all of our employees. It is a workers' compensation insurance expense, and we'll pay for that in cash. The amount? $2,250. Done. We have purchased it. We'd get our dates in there and everything. That covers number one. Now we are covered for the entire year for workers' compensation insurance. Since it was an estimate of $450,000 for the payroll for the entire year, when it comes to the end of the year, we can actually now look at what our true payroll was. So true payroll was $430,000. Well, there are two situations that can arise. You can have your estimate be higher than what the actual payroll is. You can have your estimate be lower than the actual payroll is. In this case, our estimate was higher. We have purchased more coverage than we truly needed. Therefore, we will be receiving a refund. It is receivable. We haven't received the cash right then and there on our desk. We are planning on receiving the cash from the providing insurance agency. Now, a lot of people would assume that it would be cash as well up here, but we are not going to be dealing with the cash. It is receivable until we actually receive the cash. Now, this insurance expense right here of $2,250 will be undone because we're going to be getting a refund, so we will do the opposite and we will credit our workers' compensation insurance expense. Now, the difference up here from $450,000 to $430,000 is a $20,000 difference. We are not going to be receiving a refund of $20,000 on the $2,250 we have previously purchased. We will be getting the 0.5% on that $20,000 times 0.05. $100. And we are now done with this scenario. The second scenario is going to work very similar to this first scenario, except we will not be receiving a refund. We will have to purchase more workers' compensation insurance because we did not purchase enough the first time around. Don't forget your dates as well, please. All right, scenario 2. The company estimates that payroll for the coming year will be $130,000. Workers' compensation insurance premium rate is 0.3% in this case. Must be a slightly safer job. This first original entry is going to be repeated. We will need to purchase workers' compensation insurance with our cash. It is another expense. So we can crunch the numbers. 130,000 times 0.3%. $390. That's what we will pay at the beginning of the year. We will have our coverage. Now, comes to the end of the year. Don't forget your dates, please. At the end of the year, actual payroll is $142,000. Well, our estimate was $130,000. The actual is $142,000. So that is a $12,000 difference, and hopefully you can see that we did not purchase enough insurance, so we need to purchase a little bit more. We will have another workers' compensation insurance expense. Easy to just copy that down. And we are going to be paying for this as a liability, a payable. Unless, of course, the second you journalize this, you sit and you cut a check, then it would be cash. But if you were not cutting the check immediately, workers' compensation a liability payable. Now we need to find our amount. The difference, $12,000 times 0.003, or 0.3%, $36. We need to purchase $36 more of insurance. Two options. We're going to always purchase your insurance. Option 1, you get a refund back and you have this entry. Option 2, you need to purchase more insurance and you will have this entry. Thank you very much.